Okay, hello everyone. Welcome to this weekend's weekly study session. We're going to start off here and take a look at the long-term trend model. So good news is we do have the long-term trend is still in solid shape. Went on a buy signal on this long-term trend model all the way back in March, April of 2020. And since then, of course, the S&P 500 is up almost 60%. So really just staying 100% bullish for the long-term trend. And as I pointed out many times before, keep in mind that if you are trading or using this for guidance for your 401ks or your longer term money, you got to realize that in order for this to flash a sell signal, you're probably going to have to give back a very good portion of the gain. So I don't know when this will occur. Maybe, the S&P will be up more from the buy point, but the give back will probably be somewhat substantial. Sometimes it's a lot less than others. It really depends on how it, how the market tops at that particular time. But again, this isn't something that sells into strength. It's going to require a downtrend to get underway before. Just like on the upside, it's not going to pick the lows. So anyway, just wanted to point that out. Keep that in mind. Sometimes you're better off just selling into strength and not waiting for that downtrend to take hold. So the advanced decline line is hitting new highs here, which is a good sign. And again, I don't put any real weight on this kind of stuff for my individual stocks, for trading my individual stocks, but it does give me some perspective as to where we are. And what I'm mainly looking for is to see if the bull market's intact, and if I should be looking at corrections and pullbacks in the market as buying opportunities, or switching over to looking for shorts. And as long as we're in a bull market, the long-term trend is up. The fundamentals are solid as far as the monetary conditions, and we're seeing what we need to see as far as the participation is concerned. Then I'm looking to buy stocks. So whenever there's a correction, I'm trying to find the stocks that are holding up the best and get in there. Now, of course, if we're under distribution and monetary conditions look horrible, and we start seeing all these signs, the trend model is now we're in a downtrend. Now it's a different story. Now we're thinking about cash and staying away from going long, and maybe even going short during the time that you're in that bear market. So that's the main thing, is to try to figure out what type of big trend that we're in. So now the financials, if you look at the XLF, hit new high ground. So we do have some areas that are performing, and we're trying to take advantage of this on a few names here and there. Of course, American Express, I did hold into earnings. Some of you may say, why did you hold into earnings with small gain or no gain? That stock really doesn't react. It has not really reacted that bad to earnings. And there's, again, the fundamental research that I've done on it, it led me to believe that they were going to beat, and that I thought there would be a good response. Of course, the financials are acting good here. So there's a number of reasons, but generally, you still have to keep the general rule of thumb is you don't want to hold into earnings with a large position. You never want to take a lot of risk, and we'll go over that in a little bit when we get into the stocks, of course. Also, energy has just really come ripping out of a low cheat area here. You can see in the XLE, I'm sorry, and hasn't really formed any type of handle or pivot in this base, just came ripping right out. That's one of the reasons why I haven't participated in some of these. And I sort of stay away from a lot of the oils, and for the most part, unless they're really setting up just right. Tried Oxy a while back, which we'll go over just a little bit, because it's actually adding it back to buy alert. And then DEN, of course, we're in that. So there are a few energy names, but these are the two areas that have ripped right back into new high ground. So looking pretty, positive in those areas. Bitcoin also has hit new high ground, which is pretty impressive here when we start seeing various asset classes hitting new highs, and the advanced decline line hitting new highs. Again, we're not going to call for a bear market at this point. Maybe maybe we peak here. I don't know, but as of right now, we're seeing some improvement. So certainly, the market is as a whole here is looking better than it was when we were correcting and we're under distribution. We did get a sell signal on August 18th, but we flipped over. Well, we didn't flip over. We got buy alert status on October 14th, and actually, right now, it's really on the verge. We could almost flip it to a buy signal because new highs, new lows has just started to turn positive. But with what I saw just recently, we're holding off for a day or two. Whoops, skip the start chart there. Sorry, and that's this distribution. So with this distribution, talked about this last week, where we want to watch after we get a follow through day. We want to watch to see if there's any immediate distribution of the next several days, or within a week or two even. And usually, if you get that distribution in the first week, about 80% of the time, it kills the rally. And it negates, if you will, the follow through days. So we did get some immediate distribution. So I think we got to be a little bit careful here as far as the indexes are concerned, how they ran straight up here. This is the Nasdaq that we're looking at, and we've been going through this blow by blow, day by day over the last month or so. And we also are short term overbought in these indexes. The Dow is hit the new highs here and got overbought. That doesn't mean it can't get more overbought. Doesn't mean we have to correct, and it doesn't mean that the distribution day has to lead to a big problem here. But again, it is a red flag. We'd rather see no distribution whatsoever in that certainly in that first week. The real, boil this all down, and it really comes down to this right here, and that's why I came up with this new model here that is strictly based on the stocks, because this is really what I look at. I mean, I'm basing my trading purely on the stock environment, 95%, if you will. And again, not only am I basing it on the stock environment of how stocks are working, but I'm constantly trying to measure what I can expect on the upside and how often I can expect that. And then I'm adjusting my loss, and I'm adjusting, where I take profit. So very simply, you've heard me say this now for the better part of 8 or 9 months, that we haven't had those big moves and the swing trading side, or certainly going for longer term moves than even that. So, you're taking the shorter term moves has been what has worked. And even if you have a tough environment here, the short-term trading is kind of always on the table, as far as, some stocks are always moving a small amount each day, but I'm trading them strictly from the setups that I would trade just as if I was trading a swing trading idea, or any other type of coming out of any other type of, buy point. It would all be off of the VCP, off of daily charts. I'm not looking at intraday charts, although I did show you that American Express, just simply to, I put that out last week to show you that this is timeless. These techniques and what happens in the market, more than the techniques, just the footprints in the market of supply and demand are timeless. They don't know any time frame. Now, a few things. I'm just going to kind of give you all the different sides of the coin here. I am watching the 10-year, and I think, if the 10 years gets the new highs here, when I say new highs, taking out this recent high of 174, that's sort of like the yellow flag, maybe, the first shot across the bow. I think 2%, getting above 2% would start to really get some attention and headlines, and that might get some investment managers nervous if we start going above the 2%, because now the bond market, might be saying that where inflation isn't as transitory. I don't think inflation is as transitory as some are saying, or some believe. I think we have some areas that are not transitory, wage inflation and things like that. Wages, I don't think are going to go back down. There's some areas, and then there are some areas like supply chain issues but I think the supply chain issues are going to last longer than most are expecting right now. Now, we don't have an inverted yield curve, which that is generally what would be a big negative and could give us a bear market, a secular or good sized bear market. We've seen those at most of these, or pretty much all of the major bear markets going back for quite some time. So we're a good distance from that. So that's a good sign. Monetary conditions are still very bullish for the market. What I'm watching is the small caps here, and I've been waiting for. I don't know. Maybe we're going to need a bear market first before we get a change in leadership, or if we ever get the small caps to come back and start acting well. But you see right here, we've got a little starting to form a little pivot. I mean, we've just been going through this basing in this Russell 2000, and it's been getting tighter and tighter. And really, we need this to break out to the upside. A breakdown would be very negative, I think, and would have implications, I think, for the whole market. I don't want to lose the small caps here, and all this basing turn into a negative. There was some recent studies that I saw that pointed that under the conditions that we've seen with the small caps, that historically it breaks out from here to the upside. Again, what I'm really having a tough time with this market of coming with a real bullish case for the market as a whole, because we're back up almost at new highs in the NASDAQ. We're a good distance away from the 200-day moving average. And it's almost as bad as it's ever been as far as the participation. We've got 36.94% of stocks above their 200-day moving average. Now, this could just turn around and play catch up. That certainly could happen. But I have not seen this. I've not seen this type of divergence play out well in the past. When you're extended from the 200-day and you're near new highs and you're below 50%, it's been an ominous sign. So I'm still keeping one foot by the door as far as, getting too enamored here or too bullish on the market. If the stocks are setting up and they're breaking out and they're working, I'm going to play them. But with this lack of participation, I'm also realizing that it's not broad-based. So I have to be careful. The good news, and again, there's such a mixed picture here. There's so many. I mean, it may sound like I'm hedging with all these different things, but I'm just simply just reading the tea leaves, if you will, or the readings of these various I don't even like to call them indicators, but gauges and readings that I watch. And they're all over the place. There's so many contradicting readings. So now we've got sentiment is actually turning quite positive for the market from a contrarian standpoint. Well, if we get below 40, we start getting to 39% or lower, that gets into the first stage of the bullish zone, if you will. For me, that's where I start ranking that bullish as far as the sentiment. So we're actually, being near new highs, having the sentiment be so bearish, it seems like a lot of people are expecting a correction, and that's good. That's good for the market for a potential rally. Again, we get above 60 and that starts getting in the danger zone, and we start getting into the mid 60s and above. That's the nosebleed section, and there's little room for error at that point. So it's still, I think, a very mixed market. I mean, I have, in my 37 years of doing this, I've never seen such a mixed market. Selective and rotational, it's still as selective, as rotational as it's been for some time, fiercely rotational. That we've seen some improvement in the models, but what I really boil it down to is the traction in the individual stocks, particularly the ones that I purchase. And even if I purchase them for a short term, let's say I buy a stock and I day trade it, I scalp out of it, I'm buying them from the same spot that I would buy them to hold it for a swing trade. And even if I were to sell it, I'm still watching them. I'm still keeping an eye and saying, okay, how are the swing trades working out? Because that's what's going to tell me if I want to switch over and start going for bigger moves and holding the swing trades. So in watching, and that's what the STEM model is ranked on, is how well stocks are acting from breakouts and whether they're confirming or we're getting violations and pivot failures and so forth. I just don't see the traction to warrant getting really aggressive here. If you're getting the traction, fine. I'm aggressive on the day trading stuff in the short term, real quick in and out. Yes, I have not changed that at all. I'm very aggressive on that. But holding overnight or holding for a number of days, yeah, if I can finance the risk, maybe if it's a smaller position, but not to take any real risk at this point. We did see a 6-day, distribution. When I say day 6, meaning day 6 after a follow-through day. So there was some immediate distribution. Again, stocks, just focus on stocks. The stocks are setting up, they're breaking out, great. Buy some, they're working. You can buy some more. You can step your exposure up, your position sizing. If they're not working, you got to scale back. and scale back until you're in cash if they're not working. And no matter what the market does, when I say the market, the indexes, they're hitting new highs, it doesn't matter. If the stocks aren't working in your portfolio, you should not be getting aggressive. Don't fight with your your own feedback. Even though the market may look good, it's not good for you for whatever reason. Whatever reason, it's like I've been in business for a long time with and done a lot of real estate business, a lot of real estate transactions, and I'm always asked to go partners in lots of businesses and restaurants and things. And I found a lot of people, they'll go and they'll go find a location where there's been like 3 or 4 restaurants that have been in a location, and they all went out of business. Year or two, each one of them went out of business, and now, of course, that location, they get a good deal on it. The rent's real cheap. Yeah, it's cheap for a reason. And I'll never go into a location in a business where a whole bunch of businesses have failed in that same location, even though it may appear like it's a great location. It's proven that it's not for that line of business. There's been 6 restaurants in a location in the last, 15 years, and they all failed. Nobody can make it in that location. Why would I go there and try to change that? There's something that you're not seeing. It's the same thing with trading. Okay, yeah, the market looks great. The indexes are hitting new highs, but you're getting churned up, beat up to death and cut into ribbons in your trading. Well, there's something there that's just not working. The environment is just not right, even though it appears so great. It's not. And sometimes you get these markets where your friends are making money and you're hearing about everybody doing well and you're not doing well, and you start thinking, I got to change what I'm doing. This doesn't work. No, it's not the time. It's not your time. It's someone else's turn. And you got to stick with it and let those turns happen. And then you'll be there to have your turn. But if you keep changing, you'll never have a turn anywhere. And when you do, it'll just be luck, because you'll just land on the right place at the right time occasionally, but you don't have any strategy, no system, no consistency, nothing to really, that you can do repeatedly. So anyway, I'm going to go back and look at the individual stocks here. I did a bunch of screening, and I'm going to do a second video. So let me do that, and then you can check back, and I'll have that ready for you in just a minute. All right. All right. Okay, so welcome back, and I'm going to take a look at individual stocks here now. Let's just talk about a few names here on the upside and a few on the downside, or a few that have shown me some trouble, if you will. First of all, on the upside, so Schwab, bought some Schwab here, and this is acting really well. I'm very impressed. Came out on earnings. So again, this is a perfect time to take a look and do a violation count, or confirmation count, if you will. Here, 1, 2, 3, 4, 5, 6, been 7 days right from the breakout. So you've got 1, 2, 3, 4. You got 5 out of 6 days up since it broke out right here. You got 5 out of 6 days up. 1, 2, 3, 4, 5 good closes. One not even a bad close, a mid close. So you got confirmation here. You got follow through buying. You got a decent volume on the breakout, right here. And you're up 5 out of 6 days with all good closes. So this is confirming. So what that means is you want to try to, if you're playing this for a swing move, you want to try to go through the first pullback and let it go through a natural reaction to get to, a bigger move. I mean, maybe it just keeps going here and you get to a bigger move without going through a pullback, but at some point you're going to pull back. As long as the stock's acting right, then you should go through that pullback and see if you can then get that tennis ball action and get into new high ground. Now, if you want to shorter term trade, that's fine. You should be selling right into strength. Right now, we're up over 5% on it. This isn't a really big move. But again, if you're short term trading, then you might be selling 5 to 10%. Another one is AXP, which of course came out and we bought a couple of days early and then went into earnings. You had a gap. Now this is up 5% from our purchase. Nice base. We don't have really enough days here to really grade this and to start saying if there's violations. But so far, we came out here and that was a low volume breakout. Next day, it pulled back a bit right before earnings, and now we came out on earnings on really nice volume. So this looks really good. And if you look at the weekly too, it looks great. We had that nice weekly close here in the upper, and look at the tight closes. 1, 2, 3 tight closes. That's one of the reasons why I liked it so much. The weekly looked beautiful. You had the tight closes and just really nice weekly chart, daily chart also. Had that little shakeout right here. Came back, tightened up for a couple of days. Really just textbook. And you don't normally get, or it's it's sometimes tough to get these textbook setups in the larger cap names. You usually get these coming off of bear markets, and you'll get textbook setups in the larger cap names. Usually later stage, you don't get those textbook setups. I'm not going to go over everything, just a few here. This SHOO, of course, I bumped it. So it first broke out and then it pulled back for a day or so and then resumed. So just bumped that to a full position. Goodyear, some of you may be wondering that this one, it broke out. I was looking to buy it. And then I figured, well, let me just buy it. Pulled right back to the breakout. So I'm basically getting that same price and to see how it closes. If it had a bad close, I might just reverse out of it or maybe just give it another day and see if it can't come right back. But it had a pretty decent close. So I stay with it. And this is acting fine. This is exactly what you want to see. It pulls back to the breakout and then buying comes in there. You can see the volume's up, right? And it is a red bar, so it's showing that it's down for the day. But this actually came off the lows and closed a little above the mid of its range. So that was actually more of accumulation than distribution. So not still looking okay. I'm not going to go over all the casino stocks. We got a couple of them, but MGM is another one where just buying the pullback. I felt like this was so strong that you don't want to wait for a pullback all the way to the breakout, because this kind of strength, you shouldn't get a pullback to the breakout. If it comes all the way back down, that's actually showing you weakness. Like, I don't want to see this pull back all the way to the breakout. I want to see it pull back maybe half of its rally, and then from there we should see some support. So where I expected to see the support, that's where I started buying it as it started turning back up. And now from here, I'll let it maybe even undercut this low, okay, and come back to the 20-day and even come in a bit more. But I don't want to see it retrace everything. So a little bit trickier there. PSTG, this came out here, but then squatted all the way back down. Now, I don't like to see that. The volume was not very heavy. So it didn't break out on heavy volume, and then it squatted. So now, we're in a situation where we got to see and watch the next day or so and see if we take out this low, which is a good chance. You might get knocked out of this, but again, not a reason to just run out of it just yet. Let's see, CYTK. So this one, of course, we scaled out of. So just go into a natural reaction here. Say this is the first pullback. You had a little pullback here, but this is part of it. You're just stair-stepping your way down. So this is the first natural reaction. I would like to see it hold here. I don't want to see these lows taken out. But I wouldn't, if we did, I probably wouldn't sell, because I'm so close to break even that why sell being up, 3%. I might as well give it break even at that point. If I let it come all the way back to where, say you're up 18 or 20%, you let it come all the way back down to where you're only up 3. Well, you might as well give it the full, the full amount of distance and go to break even. DEN, this was dicey. I mean, let's go back and forth. Again, another lesson in, buying and putting your stop and then sticking with your stop, maybe reducing, if you want to reduce, fine, if it's not acting right, and then you can add back. Didn't add it back yet, but almost did on Friday. But it's acting pretty good. And of course, this area is very solid right now. The energy area is pretty solid. So COF, I want to talk about a few names that weren't acting so great. So this one tried to break out here, and then you had this outside day, not very good. And then the first little rally back, I immediately chose to take some off the table here, just to try to lower that loss if we get stopped out, because that's really not very good action. And you see the volume was up a bit, so you broke out here, and then you had a low volume out, high volume in, and that's a violation. So, and then you had the outside day. So a little off the table right there. The other one here was this ISEE, which I've been watching. And I almost bought it. I almost bought it on Thursday. And then Friday went up a little bit, went to new high ground, and then the big outside day. That's not what you want to see. That's really not what you want to see. Let me just zoom up a bit here and show you the volume. Look at the volume. Low volume out, high volume in. See, that's a violation. Same thing, you got the outside day and you get the low volume out, high volume in, and you don't get a very good close. So that's a violation. So if you own that, if you bought this breaking out, you definitely would want to reduce there. That go right after the breakout like that with the big outside day and the low volume out, high volume in. I almost always would reduce under that condition, or at the very least, give it that low of the day. Maybe if it stays inside, fine. But if it takes out the low that day, then I would reduce. Maybe not sell it all. Of course, the big one is Snap. And boy, this is a torpedo, right? Look at that volume. So this is a major sell signal. Now you may get a snapback, and you may, pardon the pun, it may snap back. There's a good chance that you'll get some type of technical bounce here at some point, but who knows when. I never play for that. But if I was in this and I got caught, I would just get out. These are very dangerous. If you take a look here, this is the largest, or at least the second largest. Yeah. Let's see. Yeah. Since the lows here, you've got one of the largest weekly volumes on the largest weekly down bar. And that's a major, that's saying that institutions are getting out. That's a major sign that institutions are unwinding their positions. And you always have to be careful. It also has, look at the daily volume. It's gigantic. If we go back, we take a look from here. And if you recall, those of you who've been with me for a while, we were buying this over here. We were buying this over here and selling it over here into earnings. And then you've gone. So, I mean, this has, made a pretty big move since your optimal buy point. And you see, as it progresses, now you start getting sloppy. It starts getting very crowded. And this is what I talked about, how, these are crowded trades with these well-known names. When you come off the bear market lows, then you can go into the bigger names, and there's not many eyes on them because people are they're still licking their wounds. They're still not even believing that there's a new bull market underway. But now nobody believes that a bear market will unfold. I mean, everybody is bullish, and I've learned on Twitter, if I say one negative thing about this market, I get attacked from every angle. So that always gets me nervous too. But look at the volume. This is the largest daily volume going all the way back. So that is, again, that is not your Aunt Betty selling, major selling there. Let's see, OLN, that was another one, earnings. And so this, I was telling you, recently that some of them, I'm choking off really tight, and probably too tight, but I don't care. It's okay. For me, I'll get out of them if they're not working, if they don't do what I think right away. I'd rather be safe than sorry. This is one that, we did get knocked out of and turned right back around, and then went into earnings. Nice breakout on earnings. Really, really, that's a nice breakout from a really well-formed base. I kind of, feel like I should still be in this, but unfortunately I'm not. Netflix is another one where it's acting really well. I'm very impressed how this is held up. Now, I don't usually buy, or almost never buy, when there's no base and it's such a short amount of time that you've moved sideways here. But this is, more of a ascending type situation versus the market. When the market's correcting and you've got a stock that's ascending like this higher, it's a strong sign. So anybody owns Netflix, I would probably at least stick with it. Whether I'd buy it or not sure about that, but I would probably stick with it. All right, let's take a look at some names that I have for candidates for buy alert. Not sure if these are all going to make buy alert, but right now they're on my list of potentials. So we got ACLS, which is trying to form a right side. That is still needs a little bit of work, needs a little bit of tightening. This BILL, this is okay. I much rather be buying it here off the cheap than up here with this kind of wedging up a bit. So that probably won't make buy alert. I'm actually going to move that down to my on deck name. CELH. So this is one that I've been watching. And again, it held up really well during the correction and just been moving sideways here. It came out of this here. If you take a look, this is a big base that formed, came out really with no pivot. And so this may be coming from this, sort of base on base. I'm watching it maybe above like 97.85. If we can get above there, that's one that I'm interested in. Maybe let's see here. Oops, sorry about that. Let me just adjust my screen here. NFLT. So this is a recent new issue. I like this primary base. I would like to see it tighten up a bit. So we'll keep an eye on this, but this looks pretty good. Definitely one that I'm considering. CNTY, we already have, of course, as an open position, but trying to tighten up on that big base. Of course, the casino stocks have been acting pretty well. Speaking of that, Caesar. Caesar is a big cup with handle drifting back here. So waiting to see a buy point develop there. This DCOM, now this is a bank stock, and financials are acting well. And I sort of usually stay away from the community banks and the smaller banks. This is super, super tight. I mean, it's really, you got the undercut. I love the undercut here too. You see how it undercut this low and then just came right back up. That's the way a shakeout should work, where you undercut and then boom, you come right back up the right side. And now super tight. Volume comes way down. So this is totally buyable if this breaks out, but I just don't generally buy the little bank stocks. Every now and then you get where they do well. DEN, of course. That one, of course, we have. GDYN. It's another one where you've got this small base. And it's okay. I don't know if that's one that I'm going to put on buy alert. Goldman is coming up this right side and forming a little pivot right here. Would like to see a little bit better right side built out, but the way the market's just sort of ripping back here, we had it over here. If you remember, bought it over here. It had a squat, and then one day down, but had a good close, and then it was off to the races and made a little profit on it. MDB is one I've been watching for quite a while. Had this gap up. Now you're forming this little base. MGM, of course, I talked about. MNDY, I've been watching for a while too. I was looking at this as a power play, but then it came off here. And then since then, we're forming a larger base. Again, if we can go inside, you got these reversals right here. I'd like to see it stay tight and then come out, take out those highs. This is one that I'm pretty pretty interested in. Movado, again, has a little cheat area forming here. You tried to come out here. Maybe the weight of the market took it back. I'm not sure, but MYGN. So this has a little low cheat, but you're going into some supply here. So, and you got the 50-day is just starting to turn over. So this is a little more questionable. I certainly wouldn't take a big position coming out here. That would maybe be a starter position. NDLS. This had a gap right here, and now trying to form that pivot point. It's a little jagged, a little bit sloppy, but I like it. I like it. It's a big base here, so I'm watching this. This is one that I'm watching carefully here. NMRK, Nancy, Mary, Robert, real tight here. Take a look how tight you come out again with no pivot, but now you form this little ascending pivot off of a natural reaction. I think this is one that we may be able to buy coming out here. So it's one that I'm watching. Oxy, of course, this is one that we actually bought this back here. It was perfect. I mean, this was picture perfect. I love the way it came up the right side. There was some really smart people buying this stock around this time. I think David Tepper owned this name. Was a new buy for him. Had a shakeout, then ripped higher. I thought I got Hardaway crossovered, but then it rolled over. All right. And I would have easily, certainly been stopped out over here. And now we've sort of re-established and rebased, undercut this low, create a little shakeout. This looks like this might be back off to the races now. You've got this big base. Some would call this a double bottom. I don't know, whatever you want to call it. But I think Oxy, I'm interested in Oxy here. I think there's some good fundamentals behind it. PAC, P-A-C-K, forming a little pivot here. That might be one that's tradable. And of course, this Signet Jewelers, real tight here, real tight. Keeping an eye on that one. Maybe that might be tradable. TGI TGI is a nice base here. I love this base. And now you've got the little, you're forming this little VCP right here within the larger VCP, little spike down here and roll. I mean, it's really just a perfect base. It tried to come out. Some people might have been sucked into this on Friday. Just took out this 2052. Well, no, it was actually 2052. It stopped right at 2052. So I would see if this goes inside and takes out that 2052, that might be something we can buy. TALE, tile. Another one forming this right side. Looks like it needs to develop a little bit more. ZD. And this is a little bit sloppy here. You had this down move here on a little increase in volume, but since then it came back and now it's trying to tighten up. If this can stay tight, it's a little bit funky here, but I like the way it reasserted itself. And if it can stay tight, I might be buying that. So that's what I found so far. There may be more names, of course. We'll see here. I'm going to probably do some more work. It's only early in the week here, or early in the weekend here, and I still have some more work to do. And then I could convene with Mark Ritchie in the morning on Monday morning also. We kind of go over everything a last minute and see if there's any other stocks that we might have missed. So we'll see what we're going to end up putting on buy alert list. But that's a good little list for you guys to take a look at, and some potentials. All right. So monitor the platform. I'll see you on Monday, tomorrow. In the training room for Q&A. I'll be in there with Mark Ritchie, of course, and Bob Weissman, and we'll see you then. Okay. Bye-bye.